Gabriela Santos is here. She is global market strategist at JPMorgan. Jason Trennert is also here, and we're trying to make sense of what to do here. We spoke with Mohamed Al-Arian earlier. He has been telling everybody, do not buy the quote-unquote dip. Today, it looks like we're going to have a major one in terms of dip. The other question on the other side, by the way, and I guess people worry that it's irresponsible to even ask, but I think we need to talk about it, is if you think the market is actually going to go down another 20%, if you think that the death rate in the United States and the coronavirus infection rate is going to go up, and it's almost impossible to think it is not, what do you do?
So I think we're of course setting up for a difficult day here, and we actually think it might be a difficult set of few weeks actually before we get any sort of visibility into the development of the new cases of the virus, the countermeasures in terms of containment of activity to contain the virus, as well as any sort of response from central banks and from fiscal authorities. So it might be a difficult few weeks here. Our approach is twofold. In terms of focusing in the shorter term, being able to weather this difficult period, we need to be able to have protection in portfolios. We still think treasuries are a good protection. We can see there's no floor to how low yields can fall when there is a risk-off moment. We think it's crucial to pay attention to credit and the quality of credit that you hold. Our company is going to be able to weather this difficult time.
Have you been rebalancing over the past 2 weeks?
I think there's also, what we've been doing is we had already come into this year with a more optimistic view, but still a focus on quality and a focus on some protection.
But if you were optimistic, you were more risk on. Let's be honest.
More risk on, yes.
And that means that probably some lesser credit.
And so I think one area that's been a particular area of movement and focus has been on the fixed income side, decreasing even further the amount of credit, things like high yield, and focusing more on the protection bucket. There's also a second thing to be done, though, because there will be a year after the year of the virus, and we can't lose sight of that, right? Eventually, things will go back to normal. And so we don't want to completely abandon the long-term structural themes if you are a long-term investor, right? So that will include equities, that will include technology stocks, that will include emerging market Asia. But you want to dip back in carefully, not all at once, right? You don't want to buy all at once.
Let me ask you a question, Gabriela, about we mentioned globalization before, and if you think that I believe globalization is a massive force for both growth and also disinflation over a long period of time, I think now there are a lot of questions about the future of globalization given what's happening. And so if you're trying to look out, stocks are long duration assets. If you're looking at it from a longer term perspective, do you have any opinion about how this might impact inflation or global growth?
So in terms of globalization, I think we had already seen a bit of a shift last year during the trade tensions. I think a lot of companies are thinking about diversifying their supply chains a lot more. This only further reinforces this point. So we had already seen some production shifting out of China into Eastern Asia, back to Mexico for certain production. So I think that was already a movement that was in play. In terms of inflation overall, though, I think, shorter term, this hit to demand, right, is very disinflationary. Absolutely. Combined with this oil price movement that we're seeing right now, actually, what worries us is inflation expectations are falling.
What are you expecting to happen in the United States? Let me just put it in that context, because I feel like we don't have a clue of what's happening in this country, and what's happening in Italy may very well come to the United States, in which case I'm not sure the markets are indicating any of that.
And I think that's exactly part of the lack of visibility for the market is exactly how the new number of cases evolve and how governments react to it. Not just in China, not just in Italy, but in the U.S. as well.
I don't think the markets.
What do you think we're talking about here? Why else is it happening?
I don't think the markets are.
Well, you're saying it's not. You're saying it's not commensurate with how bad it could be. But we don't know. Okay.
That's what I'm suggesting is that I think
we're talking about unprecedented moves in lockdown limit and oil falling 25%. 100%. And you're saying the markets are ignoring that.
I think this is still based on the idea that maybe all of Italy gets shut down and maybe things in Europe are going to happen. I do not believe that this is mathematically inclusive.
I just think that there's a lot in the market
of New York City for 2 weeks going into some kind of major shutdown.